Ladies and gentlemen, it's a great pleasure to be here with you this morning to talk about the future. This, the most interesting of the parallel sessions, is about the future of insurance. Well, you chose it, all of you. It's about the future of insurance, it's about the impact of technology, and it's about the impact of technology on distribution, which is changing, I think, more rapidly and in a more exciting way than I've seen in my 26 years in the industry. I'm Torbjörn Magnusson. I'm the Vice President of Insurance Europe, and I'm the CEO of If P&C, a Nordic insurance company in a rather tech-friendly part of the world. We will have roughly an hour together, where I will start with some simple introductory remarks. I've got two experts that will do the more intelligent part of the presentations. That's Valter Trevisani with a new title, which is Group Chief Insurance Officer of Generali, and Cécile Wendling from AXA, with a title that we all want sooner or later, which is Head of Foresight. I wish I had that. After the three presentations, we will have, which I hope will be a lively discussion around the topics, in spite of despite the size of this room, and I think we will have plenty of time for that discussion as well. So let me then begin by making a few introductory remarks based on three simple, as I see it, facts. First of all, technology now is more important than ever for our industry. In my 26 years, I've never seen more effects of technology for the every part of the companies that we work for. Secondly, and maybe more difficult to fathom, the difference between product work and distribution is disappearing. It's going to be the same thing in the future. I'll come back to all these things, of course. And finally, third observation, the customer interaction will have to be completely rethought compared to the past of our industry. The technology, more important than ever, product distribution is going to be the same, and customer interaction is something completely different in the future than now. And yeah, there we are. What a strange font. Okay. So we live in exciting times, and this is a slide comparing and contrasting the industrial revolutions, mechanical production, with the insurance revolutions. In the good old times, we had physical and personal sales and service. Then it went on to become customer centers and the telephone. In the past 5, 10, 15 years, we've seen the web come through, especially in sales, especially in some countries. But now, as I said, what we're seeing is that technology is impacting every part of the insurance industry, every part of our groups, internally as well as externally. And of course, it's influencing the rest of the world also. And this is a very encouraging slide. This is a fantastic slide. This is how the development of traffic fatalities has been seen, as we've seen it in Western Europe for the past around about 40 years. And some people say that this is also the imminent demise of the insurance industry that we're seeing. We will not be needed anymore because there will be no traffic incidents. I think that many people that are thinking about this are saying it because they think that this began 2 or 3 years ago with the self-driving cars and all the discussions around that. And what this slide, I think, is showing is that despite the fact that we now have a third as many accidents and fatalities as we had 40 years ago, motor is still the biggest line for us. The average motor loss is no smaller than it was 40 years ago. And the part of our turnover coming from motor business in the non-life industry is still the same. So somehow or other, I think that we will see a role for life and non-life insurers also going forward with self-driving cars, but I think we'll take that as a moot point and discuss it later on. Product and distribution work is no longer going to be different. Look at the right-hand slide, right-hand part of this slide. Admittedly, it's in Swedish, but it's the screen that the sales agent sees when he sells caravan insurance in my company. And then on the left-hand side, this is what the customer will sees at the moment on the web. Who's employed by the insurance company? Who's the expert here? This is the product. These are the questions that the customer will answer. This is the product. And he will only do that if he likes the design of this product. There's no longer any difference between distribution and product design. And it's exactly the same thing for employees as for external parties. And this is not only for the customer, this is also for partners, for brokers, for various intermediaries, alliance partners. This is very, very different. Who is answering the questions here? The difficult questions that the person trying to buy the policy is asking. And this also leads to completely different interaction. This is a typical, not a non-typical, this is a typical interaction with a client these days on personal lines. A client goes into a site wanting to buy a car. He goes to the car website, and after a while, he actually wants to look at the insurance cost for the car that he's designing on the site. So he presses the banner ad, comes to a content page. Yes, it's in Finnish, but I think you see the point. The content page of the insurance company. He doesn't quite get everything, so he starts using the chat. And then the chat is not able to answer all the questions rapidly enough, so he actually picks up the phone and calls the customer center, gets some answers, goes on to the customer pages because it's a client from before, and then he sees a retargeting ad for another product, or he's being suggested a different product, a next best action, as we call it in the call center environment, comes to a new website, new contents, etc., etc. Which of these steps does not need technology, new technology? Which of you is working for a company which has done all this before? Not me, at least. This is a very, very different customer journey than the field agent calling you, making an appointment, visiting you at home, and discussing your total insurance need. This is pure technology, all of it. And in the good old days, we could design the product in the product department back office, design some documents, and then tell the client, this is what you need. And basically, he today will answer, I'm sorry, up yours. I'm going that way. And this is what the product should look like. And as an industry, I think we've come a long way, haven't we? Both non-life and life. It's much better than it was 20 years ago. But we are not quite there going diagonally with him and hand in hand saying, yes, we're flexible, we do it the way you want. And this does have a rather revolutionary implication for us, I think. And this is my last slide. This is a consultant firm that has phoned up a number of leading people in insurance companies around Europe and asked them how much more of the interaction will be on the web compared to other channels. The web digital channels is the red bars here. And just look at a few of them, and this is in 3 to 5 years. 25% more of the purchasing will be done over the web. A third of the servicing will be done on the web. claim submissions, a third more than today will be done on the web or other digital channels. And of course, this is a third of the employees in the insurance companies. I think we've come a long way over the past 20 years with this technology revolution. I think that technology is more important now than ever in my career, at least. These were some simple introductory remarks about the world that we live in, and I now leave the floor to you, Valter, to hear about how Generali has approached this in reality.
Thank you very much. Very inspiring. So I would like to share with you the reasoning and the journey we are undertaking in Generali to follow the changes which are currently taking place in our industry. So I will give you a very brief introduction, allow me for a very short marketing pitch describing my company, and then I will share with you what we are doing in 3 lines of business: motor, home, and health. So, Generali, you know we are a 71 billion company servicing 72 million customers in 60 different markets. According to the new strategy, by 2018, we want to be regarded as a retail leader in Europe, as an agile, fast, and lean group, able to provide our customers smart and simple solutions, leveraging on technology. Having said that, we have to take into consideration that our industry is undergoing a seismic shift. Technology is changing the rules of the game, and most importantly, is changing the behavior and the expectations of our customers. As far as this point is concerned, a couple of numbers. There are 3.5 billion smartphones in the world. There are 5 million connected cars, supposed to become 20 million by 2020. The percentage of connected homes is increasing by the day. If this is the situation, I think we will all agree that customer centricity means to provide this new generation of customers with solutions which are simpler, which are agile, and are able to meet their own needs driven by technology. The new breed, the new customer, is the hybrid customer. The hybrid customer is informed, is technological, and is challenging the traditional insurance propositions we are offering. Let me say at once that the traditional policies are here to stay, will be there in the future, but we have to complement our offer, and we have to integrate our portfolios with solutions which are taking into consideration the very wide variety of new lifestyles cropping up each and every day. If this is the environment we are facing, the ingredients we have to use in our daily recipes are flexibility, are simplicity, are proactive protection. And these 3 ingredients have to be used with a view, on the one hand, of enlarging the scope of the services we are providing, and on the other hand, to increase the number of contacts with the customers. On this basis, the mantra going forward is to shift from coverage to prevention and protection, and to move from policies to solution and from data to information. Telematics is an answer to these developments. Telematics is getting momentum, and it is getting momentum also because from several reasons, it is a win-win combination, taking advantage of the needs and expectations of all the different stakeholders involved in the value chain. The customers, the policyholders, are rewarded by the possibility of buying a product which is mirroring his own characteristics. The insurers, ourselves, have the possibility of better understanding the risks we are putting on our books. The distribution network has the possibility of increasing the contacts with the policyholders, has the possibility of increasing the loyalty, and in this way, to increase the retention of the best clients. If we look at the supervisory authorities, they are interested in the development of telematics for two fundamental reasons. On the one hand, it is a way of giving an answer to the problem of the very high expensive motor policies for the new drivers. The second aspect is related to the fact that improving the driving abilities and capabilities, they are reducing the frequency of fatalities. And in this way, it is saving lives. Now, as I said, let me share with you what we have done, and I will start from motor. In motor business, telematics is heavily relying on two aspects, technology and data. Technology and data allows us the possibility of monitoring the driving style of our clients, of our policyholders. And we can provide our clients also with an advice. We can tell them how to reduce their risk profile, modifying their driving habits. In this slide, I would like you to consider what is happening in the case of the policyholder and in the case of the insurance company when we monitor, we follow the customer journey of a telematics client. On the top, we are representing what is happening to the customer, to the client. He buys a policy, he approaches the airport, he receives a contextualized offer, for example, telling him if he needs a travel policy. He receives an alert if the road conditions, the traffic, or the weather is bad. All the data are constantly updated and are made available to the customer through an app. If the customer has the bad luck of incurring into claims, we have the possibility of providing him with automatic assistance. When the policy expires, he receives not only an invitation for the renewal, but also the offer of additional products and services. Now, let's look at what's happening to ourselves, to the carriers. The devices used for the telematics products is allowing us to get hold of a substantial amount of data. This data, as I was mentioning before, can be used to monitor the driving style of the policyholders. Are stored in a cloud, and they are modeled for business purposes utilizing smart modeling. Data analytics and telematics are offering us fantastic opportunities in order to improve the granularity and sophistication of pricing. We can predict the probability of churn, and we can also identify potential countermeasures in order to reduce the lapses. When it comes to the claims, we have the opportunity of coding each and every claim according to their probability of fraud. So, as you can see, there are different advantages. We can improve the sophistication of pricing, which in the soft markets we are currently undergoing, is an important source of competitive advantage. We can broaden the business proposition to our customers, and we can make our offer differentiated, making available added services. We can contain the costs, acting on the claims moment. But motor is just the starting business line of this journey. In motor, we are making important strides. The Italian market is the second largest in the world after the US, and Generali at the end of 2015 managed to write almost 1 million policies. We were also pioneers back in 2011 to launch through our direct company, Genertel, a pay-how-you-drive policy. Now, going forward, we believe that the data is the fundamental lever in order to make our journey more and more customer-centric. The data utilized in order to come out with a tailor-made approach, in order to profile the behavior and the characteristics, the features of our clients. And for this reason, in July last year, the decision was taken to buy a startup company in London called MyDrive. And now I would like you to share with me a very, very short video highlighting why MyDrive is strategic for Generali in these moments in time.
In the insurance sector, it's become crucial to know clients well, understand their behavior, lifestyle, and attitudes. And one of the areas where a tailor-made product makes a difference is motor insurance. For this reason, Generali has acquired MyDrive, a leading English company in the collection and management of behavioral data. MyDrive has developed an original methodology capable of analyzing very detailed behavioral data collected from a variety of devices, like smartphones and black boxes, allowing an even more accurate profiling of all driving behavior in relation to the type of route, traffic, and other key data. Thanks to big data analysis, it's able to determine each driver's effective behavior and offer customized products specific to that driver for maximum service efficiency in case of accidents or breakdowns. What's more, it can also provide targeted advice on how to improve driving habits, fostering safer driving.
So, MyDrive is our hub, located in London, because we believe that it is important to be located in a place with the high potential fertilization of cross ideas, cross suggestions. He is currently working in motor, but we would like to extend the utilization, the reach of this company also to other areas, starting from home. Connected homes are more and more on the radar screen of different players, not only insurance players. We have a connected home when we have sensors. These sensors are interconnected, are linked with the external world, and they are capable of exchanging data. There are fundamentally 6 areas where the connected home is currently working. The first one is called comfort. Theoretically, I am here in Dublin, and I could control if in my home in Trieste, in Italy, the windows and the doors are shut. I can use another area which is called energy. I can set the heating thermostat. There is the multimedia capability. There is the health capability, a panic button to be activated if something happens. There is a safety network, smoking detectors, and there is a security capability. anti-theft, anti-intruders. In France, back in 2013, our assistance company, Europe Assistance, joined forces with SFR, a primary telco group. They put together a smart home kit and they bundle it with an assistant product. We are using now the same approach in Germany, where our direct company, Cosmos, is going to launch a smart kit associated to an insurance product with the support of a technological partner called Devolo. I have to tell you that the results so far achieved are very promising, and they are confirming that the journey is on and the engine is gearing up day by day. The next area where we wanted to deploy this customer-centric approach is health. And in association with a South African company called Discovery, we launched a wellness program called Vitality. Let me tell you that Vitality is addressing three most important challenges we are facing in the market. The first one is represented by the increase of healthcare costs well above the rate of inflation. The second one is the underconsumption of prevention care. And here there are different reasons leading to this sort of situation. And one of those is the so-called hyperbolic factor. We all agree that we should eat less and exercise more. But due to the fact that the immediate results of these efforts are not tangible in the short run, we give up. The third aspect is related to the fact that there are scientific researches proving that three controllable behaviors, eating, exercise, and smoke, are responsible for 4 diseases which are leading to 50% of deaths worldwide. It means that acting on improving the lifestyle has a direct impact also on this important challenge. The concept of Vitality is very, very simple. It is a program aiming at allowing our customers to live better and feel better. It is a program where if a policyholder leads an healthier lifestyle, he will see the benefits of lower healthcare costs. And the policyholder will be rewarded by tangible benefits. These tangible benefits can take different shapes and size, but they are invariably geared upon the motivation to the policyholder to privilege healthy lifestyles. Let me tell you that Vitality is not a program meant for healthy people. It is a program meant for people to be healthy. It is divided into 3 parts. The first one is called Know Your Health, where using a combination of online devices and health tests, we give the policyholder the possibility of knowing his status of health. And here there is also the vitality age, which is an actuarial calculation of your age compared to the actual age. And these information are used in order to set an objective and a roadmap. And here leads to the second part of the program, which means maintain your health. And over here, the policyholder has the possibility of having access to a network of partners, gyms, providers of fitness equipment, and so on and so forth, who can provide their own products on the basis of generous discounts. The third element, the third moment of the program is called reward. Motivation is everything in this sort of exercises. And we reward the policyholders in different ways. The better they behave, the higher the status they get. And the higher the status, the higher the discounts they can achieve. Again, we believe that this is a solution which can be a win-win. For us, in a moment facing very low return environment, making the road of the traditional saving products with guarantees, this is an important lever for shifting towards alternative ways of life insurance, such as protection. But we believe that the agents can offer an additional service to their clients, and in this way, they can have an element of distinction. The policyholder can definitely live better and enjoy the rewards that the system allows. And this leads me to the end of my presentation. The takeaways, the three fundamental messages I would like to share with you is that technology is here to change the rules of the game. We believe that it will be the most important game changer for our industry in the years to come. Connectivity will play a fundamental role in determining this change. The third aspect is related to the fact that we have a unique opportunity for our industry to generate a greater value to the benefits of the policyholders and the likes, who ultimately are the ones paying our salary. Thank you.
Thank you, Valter. There are so many questions that I would like to ask you to be able to steal from your company to mine immediately, but I think we should listen to Cécile first and see where we can steal there. So please, Cécile.
So I'm going to talk to you about the future of distribution. It's going to be a travel in time, because I'm the head of foresight. So I'm looking at emerging trends. I'm looking at weak signals that will be factors of disruption and change for the insurance sector. I would like to first stress the fact that we have employed sales force. We have distributors, we have brokers around us, and we believe in this human network. We believe that insurance is about trust, is about empathy, because it's about people experiencing very difficult moments. But I'm going to still have you go and travel a bit with me in the future, and we're going to see, first of all, what I call community distribution. I really believe this is a very strong trend at the moment. And here on this slide, you have Friendsurance. Friendsurance is the first company to offer peer-to-peer insurance. The idea is that you can know your friend, you can trust them, so you can all gather and have a community of friends to insure your car, for instance. So we decide as a group of friends to put money and to share the risk, and we can have at least up to 30% back if at the end of the year we had no accident. And this idea here is not only in Friendsurance, but it's also in Guevara, which is a UK-based company. And very interesting is that Guevara is all about trust, reciprocity. It's about the fact that we will not have fraud, because we will not cheat one another. Lemonade. Lemonade, very interesting, because it's peer-to-peer, but it's also very responsible company. It's the first insurance that I know who is called a benefit corporation. So I think it's very important that there is both the idea of a community distribution, of zero paper, of automation, but also of strong responsibility, authenticity, and trust in the relation. Bought by many. In the case of Friendsurance or Guevara, you know your friends, and you decide to insure each other together. Here it's difficult. You have, for instance, a disease, Crohn's disease, but you don't know maybe other people who have it, but you know that you are a specific group seen maybe as bad risk for your insurance. So here it's a broker who says, okay, we have a smart way to connect you with the people having exactly the right situation, and you can be stronger together. So you have 282 groups, so it can be people with diabetes, people in a flooding area. You already have 165,000 members, and they get, in average, 18% discount because of the group, because they're stronger in the face of insurance company. So let's continue our journey to the future and see what automated distribution can look like. I'm sure you're familiar with Zhong'an Insurance. So you arrive at the airport, you can click on Zhong'an Insurance and say, I believe my flight is going to be delayed, of course, before any information on your flight. And when your flight is delayed, then you receive money on your mobile, so e-money. And also there are some leads, so you can also have a particular offer to make some shopping in the airport. So this is a human insurance, I will say. But now, guess what? With the blockchain, you have this startup, Insurate, doing exactly the same, but with no human at all. So this is already today. You can enter your flight number, quite easy. Then you can decide on the level of insurance that you want, and then you get directly your money back. At the end of this presentation, I will play a short video about blockchain, where you will see how blockchain can really revolutionize the way we distribute insurance in the future. So you might think that blockchain is only maybe for very small niche market, like these kinds of travel insurance if your flight is delayed. But looking ahead, I see a lot of startups coming up with very innovative business model. And this is a case of Dynamis, a peer-to-peer insurance company in the field of insuring employment and unemployment. And it's based on LinkedIn information. And I think it's quite interesting to see that the niche of blockchain automated distribution is growing. And of course, you can combine those two trends. You can combine being peer-to-peer and automated with a blockchain. And this is Timbrella. Timbrella is the first peer-to-peer insurance services powered by Bitcoin. So this is not only about those trends, but how they will combine together in the future. Again, automated distribution in Cerify. Then you just, can send an SMS explaining that you want a quote for your insurance for your car. It's very easy, and then you have a virtual agent, so an automated advice, giving you the appropriate answer to your question. Again, automated going further is Kuva. Kuva is you're going somewhere, but you can get insured only for an hour or more. It's very punctual insurance. Today it's running on Apple, and it's going to be running on other Android smartphones quite soon. And I think it's, again, an example where the only interaction that you have and the only mode of distribution is online, one click on your mobile, and it's all automated. Trove, that's for objects. When you buy an object of value, you can just put it in your Trove system that gives you the value and connect you so that you insure, I don't know, the violin or the iPhone you just decided to buy. Now, let me show you a third trend, which I think is very, very strong. After community and automation, I would like to talk to you about embedded distribution. So this is a program that we had with AXA and BlaBlaCar, saying people just go on BlaBlaCar, on their mobile, one click, and they find themselves in the vehicle of a person they don't know. What if there is a problem? What if the person feels bad? Can this BlaBlaCar user just take the wheel and continue driving? What if there is a problem with the car? And this is how we have embedded our AXA insurance inside the BlaBlaCar service. Another very fascinating example to me. You all know Vache qui rit, right? It's not the best franchise I will recommend, but anyway, let's talk about Vache qui rit for a second. So Vashkiri wanted those little ladies who are in Vietnam, you know, in front of the train station, and they're selling mango or bottle of water. They wanted those ladies to sell Vashkiri. And guess what? They say no. They say no. Why? Because the amount of money they earn on a bottle of water or mango is very high. The margin is amazing. Could not be the same margin for Vashkiri. So they couldn't sell Vashkiri. And they were really annoyed. Then they just say, okay, but what do you really need? You know, sitting here with your mango, what do you really want? And they say, you know, we are women, but we have like 7 people counting on us, like my children, my grandmother, my cousins. And if I have a problem with my bicycle, coming in the morning with all the bottle of water and the mango, then, you know, I can get sick and then I have problems. Then they say, well, what if we insure you for those kind of accidents if you sell Vashkiri? And of course, they said yes. And so this is how we can sell insurance and they can sell Vashkiri. Very interesting new distribution modes. And you might think, well, it's, you know, only for those small ladies, you know, sitting in Vietnam. Guess what? It's going everywhere. And this is an example that I found in Mexico with Oriflame. Exactly the same system of distribution. So my point today, going really into the future, is we have 3 major trends, 3 major models that are going to be combined in the future. We're going to combine community distribution, automated distribution, and embedded distribution. And this is what we should start thinking about. So what do we do at AXA with those trends? First of all, we have these AXA labs, and those AXA labs are really looking around us about those very tiny startups that may not be strong today, may not have many customers today, but are very promising if we look into the future. So there is one in San Francisco, one in Shanghai. We also have our data innovation labs, and we have 3 of them, Paris, Singapore, and Bangalore, where we have people doing machine learning, blockchain, data scientists, and they're working on the way we can leverage those tools and those algorithms to be better at embedded, automated, or community distribution in the future. We also have AXA Strategic Ventures, and you might have heard that we have invested in Blockstream because we really believe that blockchain is the future of insurance. We have AXA Partners because when I talk about BlaBlaCar, it's about partnering with people around us, partnering with startups so that we have new ways of embedded distribution. And also we think that all the new talent at AXA, they know about the startups. They know how to use blockchain. They have Bitcoins. So they should be the one giving us new ideas on project and new distribution mode tomorrow. And this is why we have Startin, which is an internal contest so that people at AXA can be entrepreneurs, can suggest new ideas, new product, new way to distribute, and we'll take them on board, and the winners will be implemented. Finally, it's from the 1st of January, we have Kamet. Kamet is an incubator. We want to create our own disruptors before startups disrupt us. So this is quite promising as well, and I'm really sure that Kamet is going to come out with amazing product in the future. So now, we have kind of the past, we have kind of the future. The view that we have at AXA is that it's going together. We're not going to kill the distribution network or the sales force because we believe in automation. Not at all. We believe that those kind of algorithm, technology, automation, we can put that in the hand of our sales force, of our distributors, brokers, agents. They will be empowered, making better recommendation to the customer because of those tools. So we have specific training, like do you speak digitals or those kind of other trainings, where they learn how to make the best use of all the tools available. My AXA, we have this application online. And you know, people having a connected home, it's in my AXA. People using a connected car or people using AXA Drive, it's in my AXA. So we have this point of contact. But it doesn't mean that it's only about connectivity, connecting your home, connecting your car. In my AXA, you have a link directly to your agent. You can speak to him, you interact with him. And it's not about having different ways, but it's about bringing those ways to talk to your customer together. So my conclusion, it's really about omnichannel. But it's really about being in the position of being a human advisor, a coach. And those humans are going to be empowered to serve a customer better because of those innovative tools. and because we're going to serve our client, not only maybe as an individual, but also as a community. Not only as a random customer, but somebody we really know. We really know because we've seen him, or Salesforce have met him, but also because we have a lot of information from his driving behavior of his home. So it's about also digital and data skills, very important. We're really investing a lot on that. And it's about public and private partnerships, because we will need to think about how do we regulate automated advice. And it needs to be a discussion, because we're all going to lose if right now we start having problems. Then we're going to have a bad reputation. People will not trust using automation. So by making sure we have the right level of trust and the right level of working on those emerging trends with the regulators, we can anticipate opportunities, we can find out solutions together, and we can enhance trust with our customer. So I'm going to end right now, and I'm going to let you with a short video on blockchain.
Remember, eccentric computer scientists praising a network that would revolutionize our society. Back then, the internet promised to erase the distance between people. Today, the blockchain is making another revolutionary promise: to eliminate middlemen in everyday life. How so? Let's imagine the blockchain as a gigantic account book in which every page is a block. People from around the world, called miners, validate transactions that have taken place and list them in a block. Once the block has been completed, it cannot be modified unless the miners reach a consensus. Good luck with that. So the blockchain can lock data into a public network forever and guarantee its security. No one can edit or delete the data without the whole network being alerted. You don't see the point? We do. Are you an amateur artist who is proud of your work? Record it in the blockchain. In a few seconds, your art will be dated, secured, and forever linked to your virtual identity. A smart contract can even automatically generate royalty payments to the copyright holder. The potential benefits are just as significant for countries. In Ghana, many property owners have no legal title. Because of this, they cannot use their capital to back a loan. The blockchain can overcome this obstacle to development. Simple GPS coordinates uploaded to the network will be enough to generate an open and tamper-proof land registry. What about insurance? A traveler has an accident abroad and is taken to a local hospital for treatment. With the blockchain, no more paperwork. The patient comes first. With the information stored on the network, the patient is quickly identified. His health coverage data, and maybe someday his entire medical record, can be retrieved. Blockchain might be the next revolution, with endless applications. Let's get ready for it.
Well, thank you, Cécile. And by that, I think we've forced you to look at slides in English, Italian, Chinese, Finnish. So if you're ready to start asking questions in any language, we'll try. Anyone feel ready to kick off the questions? Yeah.
How would you categorize the level of innovation in insurance? Is it incremental or transformational? Where are we?
So how would we categorize the level of innovation in insurance? Is it incremental or... What do you say? Cécile, you're probably best placed to say something about this.
Well, I think we need to combine the two. So for us, for instance, we have a lot of incremental innovation. We do not want to destroy the existing tools, but we're going to make sure they get better and automatized. That's for one reason. Second thing, we will need to think about the future, and we know that there are going to be drastic change. So big data, blockchain, and so on. And that's the places where you need to be disruptive. And this is why that's the case where AXA is creating new structures to meet the challenges. So this is why CAMET, this is why the Data Innovation Lab, they're completely new, and we hire really new people with new types of profile, and this is where it's very disruptive. The challenge for AXA is then to make those two meets together. starting from today, going to the future, starting to the future and going back from today. And this is where we need to be innovative, because we need to find solutions for those old and new worlds to talk to one another. This is why I think 3 things are important in the insurance sector right now. The training and the recruitment. I think human resources is going to be key in this revolution. Second of all, the customer. The customer is at the end the one who will decide if he prefers incremental or revolutionary solution. And third of all, the regulation. Because I think the regulation so far is really made for the old world. And it's a very big question. How do we regulate this new world? And I think also we have a responsibility at insurance. Because if we do not cover, for instance, autonomous vehicles, those autonomous vehicles will not be in the street because they cannot operate without an insurance. So we have this responsibility to meet the challenge of the future in order for society to innovate and bring growth.
But Cécile, insurance policies that are low interest, insurance companies are slow and rich and trustworthy. That's how we create trust, isn't it? And now you want us to change and be innovative. And isn't there a conflict between those?
I think there is new types of trust today. And this is really what my presentation was about. Because I think that the fact that you trust your friends or your community better than everyone or people you don't know, this is something quite interesting in a way where we think about big cities and people not trusting one another. What is not true? With the crisis, there is new types of solidarity, new types of community. When we talk about trust in a big institution, like AXA, and you look at the blockchain, when you have no centralized body creating trust, it means there is new types of trust emerging from new technological innovation. And also, when we talk about trust, we talk about partnerships, because if you do not trust your partner, you cannot go into those new types of business. So I think it's about reinventing trust. And this will be so helpful for the future of insurance.
Say, Valter, do you agree with these things?
I totally agree. I would add only that historically the innovation has been incremental in the insurance business, but now we are at a crossroad, and if you don't have the courage and the creativity for being proactive and paving the way to a disruptive innovation, we might be lost. Let's consider only one development. In a few years' time, the Equal Directive will force all the car manufacturers to provide their own cars with the so-called emergency button. And this will accelerate the connectivity of the cars we use daily. And the connectivity will mean that the black box will be, as a first installation, will be equipped in the car we buy, and it might be the case that the car can be bought directly with the motor policy installed. This means that the model we have been accustomed to will have to change.
Any more questions from the audience? We've got one over here. Maybe wait for the microphone. This room is really too large, isn't it?
Thanks. Hugh Evans from the ABI. I'd be interested in the panel's views on exclusion, because we've talked so far only about the opportunities that data provides, but not those who are potentially excluded. Some of the apps that were up on the screen in the various presentations. How about one that says to a driver, your driving is terrible, your insurance premium is therefore going up? How do we begin to handle that dynamic with our customers while harnessing the innovation for the reasons you've all described? And how do we avoid politicians rushing into knee-jerk reactions, imposing tariffs and other restrictions to stop that happening?
Valter, you have 1 million policies. How many are you going to cancel next year?
Well, one of the areas where the telematics is very successful is the south part of Italy. And the south part of Italy is an area where the claims frequency is higher than in the remaining parts of the world. And the telematics route is something which has been privileged by the ones who felt that they were paying an expensive toll to sustain the claims of the others. So at the beginning of the journey, there was an element of anti-selection because the bad boys were excluded and the virtuous ones were on board. Now the situation is enlarging, and especially when it comes to behavioral pricing, where the Niki Laudas of this world are supposed to pay a higher premium, are forced to change their habits. And so there is a trend which will not be a club related to the fittest and to the best ones. It will be extended also to the ones you call excluded, but obviously when we are talking about of behavioral pricing, the worse you are, the higher the premium you have to pay.
Cécile, I've got a group of friends and we buy fire insurance together for our homes, and I have a fire and all of a sudden I don't have any friends anymore.
So I would like just to say a word and then going back to this question. I heard a lot when I was working on personalized health, you know, we're going to have the DNA of everyone and then people are going to be excluded. And it's the same a bit with telematics. First of all, technically, I do not believe that we will have all the information. So I do not believe that it's going to be so easy. Second, commercially, I don't believe that we might have interest to exclude maybe a bad driver because he might be a very good wealthy people, or you know what I mean? We're covering different fields, so it's not going to be that easy commercially. And third, regulation. I really think that implicit discrimination in a machine learning process is a risk today. So this is why we need to work on auditing those kind of automated systems. And I would like to finish saying that we really should think about the fact that the risk is completely random on one side, so a tree is falling down your car, but also something that people can change or adapt or be resilient to. And so I think that what we should aim at is see how we could be better at prevention with those tools and maybe anticipation, while still having a fair and loyal way to interact with our customer. About the group of friends, I was looking for those kind of story in the press. I thought with Guevara, French friends, there might be those kind of cases, but I never heard of any problems. So I cannot say.
I don't have that many friends anyway. So. If I'm allowed a personal comment on this topic, I think the big problem will be in health insurance, because in that area, the information already available is not symmetric. And the probability of a claim for a person with certain types of information is already very, very high. So that, I think, is the area where we will meet this issue the first.
Exactly.
Yep, we got a question in the front here. Getting a lot of exercise today.
Yoshikawa from IIS. Just a question to Cécile. Your presentation at the beginning is related to trust and community-based, insurance. And your first presentation or slides, just people hanging and just try to buy insurance together. I understand that trust is created by friends or family, but I'm not totally clear how trust can be developed by online, where people do not know each other and just join by accident. And you even say that you can discount those, circle or community. How you can create trust and lower rate of accident online basis?
Yeah. Excellent question. We're really thinking on how do we create trust. Actually, we have a trust program, and we have developed it and tested it in AXA UK. We believe, for instance, in the question of open data. What do we share? What do we give back to the customer on the way we price, on the way we deal with claims? So, for instance, you will find claim statistics on home, car, or travel that we put online, and we explain to the customer what we do. Even more radical, we explain, the change of price from one year to another. We decided to have also open data, open information on this. So I think one first solution for trust is really opening up the system, opening up the way we deal with the customer, explaining. And I think it's going to be very important in an era where people have algorithms that are kind of black box to them. So the first thing is explaining, being transparent, and going to the kind of data openness. Second thing, I think, is really about not only imagining like digital partnerships, but really getting people to meet one another. So to continue to have those physical moments where people can actually meet and discuss if they feel part of the same community. And this is why the agents, the sales force are so important in this process. And I think third, I think trust will be trust in a sectorial way. People need to trust insurance. But when you look at figures and statistics, that says terrible. People do not trust insurance at all. And they actually trust Google much more than they trust their insurance. So I think we have a big question as a sector. How do we work on this trust? And this is about the relation that we have with the customer. It's about the relation that we have with NGOs and other stakeholders. So I really think that insurance has this responsibility to jointly think about trust.
Additions?
No, I think it is fundamental, and the nature of insurance is based on trust. And I totally agree that the moment when a certain activity, a certain access and approach will become wider and more customary, certain behaviors will become automatic. Your point is correct, but I see it a problem at the beginning of the journey rather than when the development gets momentum.
I had a person in my management team the other week suggest that the best distribution partner that we could have for the future would be one of the dating sites on the net. It's about trust, I guess.
Yeah.
If I'm allowed a question, something that lies very close to my heart, jumping to a different field then, which is the friction between the new and the old internally to the companies. Do you wish to comment on that? What do the old organization feel about the new ways to distribute? And to the heart of this question, of course, I guess for all of you working for companies here, is the fact of the question of pricing. Can you give a 20% discount on the web compared to the field agent selling a policy? And how does that work in your organizations now and in the future? Simple question.
Well, obviously, there are some conflicts, and the conflicts have to be managed. I am an old soldier of Generali, 28 years with the company, and I remember when Genertel, our direct operation, was set up. And then that was a moment when the agents were very vehemently fighting this concept. Now the situation is completely different. I think that there is a widespread mentality that the change is here to happen and cannot be blocked. And what we are doing is to help the agents to do their own activity in a better way. That is to say, we are carving out administrative activities which were done by them in the past, and we are making them in a condition to concentrate and focus on sales and after sales. In this way, we give them more time to take care, to be present on the customer, and in this way, they have also the possibility of being rewarded with results in terms of higher volumes, and higher volumes are driving higher commissions. I think that the multi-channel approach is something which is more and more accepted. I think that also a certain differentiation in pricing is accepted because the agent is carrying out a sort of physical consulting activity which the client is prepared to pay something more than what he can find on the web. So our experience so far is an experience of gradual convergence between the two worlds, the Internet of Things and the traditional distribution.
So, Cécile, I call the call center of AXA and I get a price, and then I go down to the web to get it cheaper after having obtained all the information from the poor sales agent who doesn't get any commission now. How are we going to deal with that?
Okay. I think big data is helping quite a lot because we can have a 360 view of the customer, and whatever channel he's using, we can get a global view, which I think is the way to solve this problem. But I will also say that today it's very costly. It's very costly to have this customer 360. It's very difficult also to have the right flow of data and so on. So this is where I think it's quite reassuring for the traditional actors, because cross-selling or upselling is easier with an agent today than with those really, really sophisticated analytics. And also going back to the question, I have a dream job, as you say, head of foresight, but it's also sometimes very difficult for the people inside the company, because I'm always talking about things that they think, where am I in this picture? You know, automated? Well, I'm not there anymore. And I'm like thinking, okay, guys, the world is changing. And if there is nobody to tell you about this, you will not get prepared to adapt, to change, maybe get something out of those automations for yourself, for the way you do business. But this is something that I have to repeat and repeat and repeat. It's very, very difficult to be a big boat and to be agile like a small monkey, I would say.
I think we've got time for one more question from the audience, the final question over there.
Hi, David Gallagher from Excel Catlin. I accept the argument on trust. I just wonder whether, as I look at my teenage daughter who will move mobile phone plan when a small element of the plan changes, not cost, she's using about half her minutes in phone calls every month. She's using less than that in texts. But she's on her plan because she can eat all the data she wants in a month. So how does that generation, I see loyalty as something, another provider comes out with another plan that gives her a little bit more. It's goodbye, current provider, hello, new provider. So to me, one of the challenges I think we face is the loyalty one. So where does that fit in the whole spectrum of what you have all laid out in terribly interesting presentations?
3 weeks ago, I was in San Francisco for the Institute for the Future annual retreat, and they showed us a survey, really interesting, on what they call generation transition. Generation transition, they're the teenager of today. So we're not talking about millenniums anymore. We need to talk about generation transition. And they looked at what do they believe will be important for them in the future? What do they think about data privacy? Many topics that are very relevant to us. Some surprises to me were, first of all, data privacy matters to them, but they know how to play with it. So they know how to have different digital identity and use them in different ways. So they will know that if the price is maybe more expensive from their computer than the computer of their hands, they will go to the computer of their hands. Or they will lie on the data they put online. So I think that, for me, that was really interesting, because I thought that they were not so aware, of their data tracking and surveillance. Another thing was about their community and their relation and what they believe. And for instance, I still have this image of teenagers being a group of girls or a group of boys having different types of interests and so on. But actually, a second surprise of the study was gender will not matter anymore. The gender representation and the community affiliation that they have will completely change, which I think was quite revolutionary. And for the rest, I really recommend that you go on this webpage, because the survey is quite impressive. And I think we should all prepare to this generation, which is going to be a big challenge, not only as customers, but also as employees.
And I think, I think that's going to be the final words. Thank you very much, Valter, Cécile. Really interesting presentations, and thank you for your preparations.